Hey everyone, it's Lee Goldstein, the trading director at 10 Minute Trades. Welcome to podcast episode 46. I want to go over the important trades of the week, and it's the week that ended October 28th. So let me go over some of the events that we traded this week. So, as you know, the markets are extremely volatile, and there are definitely what I call liquidity events, where at the exact time of news, orders dry up and you can't get filled. So let me go over one event that happened this week on Friday, the personal income and spending report. I gave a warning that I felt this could be a liquidity event, and sure as I'm speaking now, the NQ had trouble getting filled, and exactly that occurred. That Friday, we also traded Canada GDP as a trap trade, and it was a very, very positive breakout trade. But we waited long enough in the room to get out of the event with a very small profit on the trap trade as well. Staying in that trade for 7 minutes, it might have been a very good profit on a trap trade. And then Revise University of Michigan to finish out the week on Friday was actually a target one winner. I was a little bit surprised because it had a very slow response to the news. It took about 30 seconds. But let's go back to Monday. We started in the trade room with the Euro, French flash manufacturing report, and the German report. And it was very surprising, but the French report had no impact at all. The German report had a whipsaw, and it was actually a stop out. Very surprising behavior from both of those events, actually. Tuesday, we had CB Consumer Confidence with Richmond Manufacturing. And unfortunately, the CB Consumer Confidence was a small loss, as that trade has had 6 winners in a row and it finally had one negative trade. So you have to keep that in mind about reports. Every report cannot be a winner every single month or every single week. They have to have resets where the event just trades in a way that it doesn't normally trade and it might stop you out. And let's talk about earnings for a second because we started our earnings last week with Netflix and Tesla. Both were winners. They've been excellent trades. And then this week we had some fantastic earnings plays. We had Google and Microsoft, a very nice winner. We had Facebook, which was a $995 winner. We had Amazon, which was over $700 as a winner. And this also goes for most members in the trade room. We're making money on these reports. Um, Now, let me repair something. Google Microsoft was not a winner for me. I got filled early and had a small loser. And that was a wait for the next earnings trade play, which was Facebook. And as I said, that was a very nice winner, 995. So I misspoke on Google Microsoft. And then Apple kind of ruined our day on Thursday. Apple has had winner after winner after winner, and it had a loser, a very crazy whipsaw on Thursday. But here's what you have to realize about a trade like Apple. We've been trading Apple earnings for over a year and a half, and almost every single trade has been a large winner. We had over $1,300 2 quarters ago. We had $890 last quarter. So even with a bad whipsaw trade this week, Apple is still well profitable as an earnings trade. And I would take that trade every single day with extra contracts without fear because it's not going to be a bad trade every single earnings period. It's going to most probably go back to being a very positive, excellent trade. So let me finish out a couple of the other events we took this week in the trade room. The API report, very tiny winner. It just didn't move in our direction very much. Australia Core CPI could have been the trade of the week. That was an excellent winning trade on Tuesday evening. The ECB main refinance rate, which is the Eurozone's interest rate decision, like our FOMC. And we were testing a new setup on that report, and we have an excellent new setup going forward. Advanced GDP, we felt that that would not be a smart trade to take due to volatility. We looked at an oil trade on that, and we'll be looking at that going forward. Crude oil inventories, still not performing that well. We haven't been trading that live in a couple of months. And natural gas, if you didn't have experience looking at the way a report moves, you would think that natural gas might have been the seventh winner in a row. I think that there was no liquidity, there was no orders available, and natural gas would have been a stop out. And in fact, I'm positive that that's what happened. It looked like a great move, but there were no orders available. It was a liquidity event, and it was would have been a stop out had we traded it. However, natural gas has had 6 winning trades in a row prior to that, and it might be time to trade natural gas again. The 7-year note auction was a small loser. That's probably the worst of all the note auctions. And that really winds up the week. It was a mixed week. We had some great winners on some of the earnings trades. Apple was a bad whipsaw, really was disappointing, but I'm very confident it'll go back to its winning ways. So, you got to take it all in perspective. Every trade can't win all the time, and you just got to keep moving forward and trade the best of the best. The earnings trades, we'll have some new setups for next week, AMD possibly, PayPal, Twitter's coming up. So there are still many opportunities left for earnings, and I have very high hopes that we'll have some great trades. You should be watching this or listening to this on Saturday, and I do have a webinar right after you listen to this video at 12:45 on Traders Corner. Come and support us and listen to the webinar, and we're going to have a great Halloween offer for everybody. So thanks for listening to the podcast, episode 46, and I'll see you in the trade room next week. This is Lee Goldstein, the trading director. Take care, everyone.